Today, I've got the biggest tax strategist on social media, and we're going to talk about all the things that Trump is doing right now with the big, beautiful bill, potentially eliminating income tax, the tariffs, bonus depreciation, and all these other cool things that are happening, so we can break it down in one spot. I got my man, Carlton Dennis. What's up?
What's going on, Ryan? How are you?
Dude, I'm excited. Not just for this podcast. We're going to be golfing after this,
Yes.
and I don't know how many strokes you're going to get, but we're going to have fun.
I promised my team, I was like, hey, I am going to beat Ryan on at least one hole. And I have a call with my team on Monday. I need to bring back good news.
I told you, I'm like, bro, I'm heading straight from the office to the course. And I'm like, dude, where's your golf gear?
I got it packed, man. This is my podcast gear, but I got a bag.
All right.
I'm used to changing on the go.
I'm the same guy everywhere. I'm just going from here to the course and we're rolling.
This is how you write off golf right here. You make sure you show up and you wear your clothing, and this is how we make things deductible.
Yeah. Yeah. We'll talk about that too, because I'm curious now that I've got M19, like what actually can be deducted, like private country club memberships. Because there's people who are like, bro, you can't write off private country clubs. And I'm like, but what if it's a business?
Mm-hmm.
Like you telling me like, and I'm not saying I'm a professional golfer, but like a professional golfer couldn't write off their country club? Like that doesn't make sense.
I believe a professional golfer can write off country club membership because they have to go practice somewhere, and you can bring your coach onto a country club, pay for your coach. This all becomes ordinary, necessary in the pursuit of income under Code Section 162A.
There we go. Well, dude, most people aren't professional golfers, so we'll go down that rabbit hole later. But for those who don't know who you are, give them the 1 minute rundown.
Yeah, Carlton Dennis, licensed enrolled agent, and I'm a tax reduction strategist. When you think of most tax accountants, you probably think of a CPA that you go to in the months of January, February, March, and April to file a tax return. Well, as a tax strategist, I'm working 365 days out of the year to help you leverage the tax code to the fullest extent. And we are running a tax advisory firm with close to about 50 employees and helping business owners and W-2 employees that have over $500,000 or more in net worth offset their tax bill.
There we go. I love it. So, dude, Trump's been doing a lot of stuff. I mean, we recently had the big, beautiful bill. I've heard him float that, they're going to get rid of income tax for people making a certain amount of money. I've seen people talking about it here in Vegas, about gambling, about tips.
Yeah.
Like there's so many things going on. So let's talk about like what's already been approved that people need to know. And let's talk about what could happen here in the near future.
Yeah. So the Big Beautiful Act became the Big Beautiful Bill July 4th, 2025, when Trump was able to get the act signed into law. Extremely patriotic that he was able to do it on our Independence Day. But what came was what we expected. Did we get no taxes on tips? We didn't. What we ended up getting was the ability to deduct up to $25,000 of tipped income. So for many workers out here in Vegas, especially those that are working on the gambling floor, they're able to deduct $25,000 on their tax bill every single year, as long as they're making under $150,000 if they're single, or up to $300,000 if they're married filing joint. This was a huge benefit to American taxpayers.
Okay. So tax-wise, like they don't really need to track tips then. They just get basically a $25,000 deduction.
Yes, you still have to report it.
Okay,
so you're going to report your tipped income, and this is why you're able to now deduct it on your federal tax returns.
I see.
So if I'm making $100,000 and $25,000 of that $100,000 was tipped income, I can report it on my tax returns, and now my taxable income is only $75,000. That's huge.
Yeah. Okay.
Yeah.
So tax or tips. What are some other things?
We also now are able to deduct overtime pay. So for many taxpayers who are working overtime, you used to not be able to deduct any overtime pay. You can now deduct up to $12,500 of overtime pay if your adjusted gross income is $150,000 or less, and up to $300,000 if you're married filing joint. So for all of our overtime workers, people that work for us too, Ryan, they can deduct that on their tax returns and reduce their tax bill.
So it's basically overtime is tax-free.
Yes.
Up to that point.
Up to that point. That is exactly correct.
Okay.
But what most people were really excited to hear about was bonus depreciation.
Yeah.
Bonus depreciation has been restored back to 100%. And it was originally going to be at 40% this year, 20% next year. And then after 2026, in 2027, we weren't going to have bonus depreciation. It was going to be at 0%. Essentially, what he did is he restored it back to 100%, which was a part of what he did in his Tax Cuts and Jobs Act of 2018. Now that we have bonus depreciation permanently at 100%, business owners can buy qualifying equipment or vehicles and write off the full purchase price in the first year that they purchase it. Pretty awesome. Also be able to help them save more money on taxes.
Yeah. So with bonus depreciation, just to be clear for anyone listening, a lot of guys who are executive type people, they kind of get around it by saying, oh, well, I just bought a Escalade, or like in my case, a Tesla Model X, and
Yes.
I use it for my business, and it's great. So if I pay $100,000 for this, new Model X, I am going to be able to write off $100,000. Like, how does that work?
So how it works is business use. The government wants to see what percentage of the vehicle are you using in business, because unless it's more than 50% of the time for business, you can't write off any of it. So if you go buy a Tesla Model X and it's $100,000, boom, do I immediately get a $100,000 write-off on my tax return? Not so fast. You have to show on the tax return the percentage of business use for each asset that you own. So let's just say you're using it personally on the weekends, and then for business during the weekday, maybe it's only 80% business, 20% personal. So you'll be able to deduct $80,000 on your tax returns. That's still a big deal, because rather than paying $80,000 cash to buy that car, you're probably going to take out OPM and get a loan, which means you're putting a small down payment to be able to get a big write-off. And this was the point of the 100% bonus depreciation being restored.
Yeah, like mathematically, how it would work is, okay, I buy a $100,000 car. Maybe I'm going to get, let's just say $80,000 of write-off.
Yeah.
Which at that point, 80,000, 40% tax bracket, that's like $32,000.
Yes.
That I would have paid in taxes that I don't. And if I, finance it, and let's say I put no money down because they're just going to give me the loan, or $5,000 down or whatever, the trade-off there is I net $30,000 more.
That is 100% correct. And what a business owner can do is reinvest that $30,000 back into his business, hopefully increasing the outcome of being able to save that money on tax.
Right. So your opinion is just like, I guess when I think about it too, like I have clients who like have business vehicles, like where it's like they have fleets that are repairing things. Like that's pretty clear to say, oh, this is 100%.
Without a doubt.
Yeah.
Yeah, those are pretty clear. It's when people have, you're
the realtor.
Yeah, you're a realtor and you have the Porsche Cayenne, and you know what I mean? Or you have the family Escalade that's also the business vehicle. Okay, well, you got the kid's car seat and stroller in the back. Clearly, this is business sometimes and it's personal other times.
But now that I'm a golfer, right? We're going to the golf course after this. That's a business trip.
Yes, that is a business trip. You're absolutely right. And you came to the office first, and then we're going to the golf course.
Yeah.
Yeah, absolutely. It's a business trip.
There we go.
100%.
That's what people need to know.
They do. Yeah. Go first to your office and then go out and meet with clients, so that way your travel is deductible.
But even if you go to the client first, it still would be deductible, right?
Well, you actually need to stop somewhere first to check in, like a Starbucks. So let's just say you go to a Starbucks first and then you go meet with the client. Then that trip becomes deductible. Just driving straight to go meet to a client is not.
Really?
Yeah, absolutely. Mm-hmm.
Why?
IRS says that you have to have a destination of an office first that you've stopped to.
Whoa.
Yeah.
I did not know that. That's crazy.
Mm-hmm.
Okay. So depreciation's back. We love that, especially at 100%.
Yes.
Or I should say depreciation's always been there, but 100% bonus depreciation. And then how does this apply to real estate, right? Because we're talking about vehicles and heavy machinery, but how do we use this for real estate?
Depreciation can work well for real estate, because when you do a cost segregation study, you're accelerating depreciation. Unlike with a vehicle that weighs over 6,000 pounds, where you're taking code section 179 and code section 168K, with real estate, you have cost segregation studies. That's the ability to move non-structural components into a 5-year bucket or a 15-year bucket. Well, with code section 179 and with code section 168K bonus depreciation, anything that has useful life of less than 20 years, you can do immediate expensing on. So with the cost segregation study, you're pulling about 25 to 30% of your building's value into a 5-year bucket or into a 15-year bucket. Well, now we can do immediate expensing on that. So you're getting 30% of your building's value in a year one write-off. For $1 million property, that could be a $300,000 loss on your tax returns just by doing a cost segregation study.
Yeah. And that's why most people buy rentals.
That's why most people buy rentals, is not just for the cash flow on the front end. It's for the cash flow you get on the back end when you're saving money on taxes.
Yeah. And that's kind of the thing I've always said. It's like, you're not buying rentals for like the monthly cash flow. Really, like that's like a lot of guys buy properties that break even. And it's like, why would anyone do that? Well, it's like if you got a $300,000 deduction this year, I mean, that's going to save you, what's 40% of that? That's 120 grand
Yeah.
that you would have paid in taxes. Plus, you know, you get all the appreciation upside.
Yeah, and it's a safe place for you to park your money too, versus just leaving it in cash. You're parking your money into an asset, and you're saying, okay, I'm going to let someone else pay down the mortgage for me. Even if I break even on this, I just saved $120,000, $300,000 on my tax bill, which allows me to reinvest it back into my business, which is going to give me a far better return.
This is a random question, but how many of your clients do you actually see that like are buying rentals for that reason versus like they're really trying to like build all this cash flow and like live off the cash flow and make money?
I would say that 20% of my clients want to live off of the cash flow and retire off of rental income. 80% of my clients understand that real estate's just a safe place to park money into that can offset their tax bill. And they're using it as a means to offset their tax bill. I think that I'm using real estate as a means to offset my tax bill because I don't think I'm ever going to be able to outpace what I make in my business with rental real estate, nor am I focused on trying to do that, nor do I want to get focused on trying to do that. I just want to continue to stack and save money in my rentals and allow for my rentals to offset my active forms of income.
Yeah. And that's kind of the point I've been trying to make for many, many years. It's just like this idea that you're just retiring off rental income and everything else. Like, sure, there are people who have done it.
Yeah.
But I mean, like in today's age, you know, with high interest rates and high prices, like most things don't cash flow at all without a big down payment. Then you're kind of defeating the point at that point of like, okay, if I got to put this massive down payment, like that was cash anyways. Like, either way, I'm in the same boat.
And then it's like, okay, well, do you want to get to a place then where you just have a bunch of rentals that are paid off? Then you've tied up a bunch of equity there. For some people, maybe they're totally comfortable with that. For others, that would be a nightmare, right?
Yeah.
So it's kind of finding what your happy medium is. And for me, I'd rather have a business that's paying me cash flowing me, and then parking that additional cash flow into assets that are offsetting my tax bill, and then just building my wealth over time like that.
Yeah. No, I'm in the same boat. So what else did he do with the big, beautiful bill?
With the big, beautiful bill, we had quite a bit. One of the things that I really liked was the SALT cap increase. So for many people that have properties, primary residences, you're only able to write off up to $10,000 in property taxes or state taxes. Well, Trump increased the SALT cap to $40,000.
What does SALT stand for?
SALT stands for state and local tax. So if you're in a state that taxes you, it's state tax. If you are in a local area that also taxes you, such as like the city of Manhattan will have its own local tax, you have to deduct those taxes on your tax returns as an itemized deduction. The only issue is that you only were able to deduct up to $10,000 of state and local tax. If you're making $1 million, you're probably paying, $100,000 in state taxes if you're in a state like California, but you're only being told that you can write off $10,000. He increased that up to $40,000, but there are some phase outs. If you're making over $400,000 adjusted gross income, you no longer get that SALT cap phase to $400 or $40,000. It drops back down to $10,000.
Yeah, I've seen him talk about wanting to eliminate property tax. You seen that?
I saw that DeSantis is moving forward in Florida to try to abolish property taxes as a whole in the state of Florida.
Yeah.
And he's already pushing for it at the state level. It would be interesting to see that at a national level, but in the state of Florida, I know that that's what they're pushing for.
Yeah, because I think Trump had said it before. He was like, like property taxes don't make any sense. And it's like, it's true, because even if you own a property all cash and you don't pay your taxes, you don't own it.
No, you don't. No, you don't.
The government going to take it.
They will come and collect it. And that's how people have gotten real estate, through these tax auctions.
Yeah.
It's insane. And they're scooping up your property without you even knowing about it because you haven't been paying your property taxes.
Yeah, because you own it free and clear and you're like, oh yeah, that's cool.
And there are people that get their property taxes reassessed and are sitting in retirement and can't afford to pay the property tax bill because they don't have cash flow coming anymore.
Yeah, the value went up so much, and it's like, it is a weird thing to get penalized for.
Yeah.
It's like you bought this property 30 years ago. You're some boomer. It's like, wasn't worth anything when you bought it. Now, you buy a California home for, what were these things? 50 grand back then. Now it's over $1 million and you're like, how do I pay taxes on $1 million?
And that's the situation many people have found themselves in. There's some, areas that do like this homestead exclusion, where if you're underneath the homestead, your property taxes won't go up or get assessed. But for many people, they deal with the reality of having their property taxes increase on a yearly basis.
Yeah, no, that makes sense. So Is there anything else that was like applicable maybe to people or entrepreneurs?
Well, I
I
think
mean, there was a lot.
yeah, I think what we saw too was the removal of the EV credit. So if you were driving an electrical vehicle, you used to be able to get that $7,500 EV credit. If you put solar on your home, you used to be able to get a 30% tax credit. That went away. Trump removed all of the funding and all of the EV credits, and he pushed all of that additional funding over to the border. And we've seen a massive increase in border security and border regulation. And that was a part of what he wanted to do with the big, beautiful bill.
Yeah. Let's talk about tariffs. Like, what do you think about tariffs and what's happening, and where do you foresee all this? I mean, they obviously look like they're here to stay.
Yeah, they're here to stay. I think, it was needed. I think going back to when Obama was pushing to go into office, he even made statements around the fact that we need to adjust tariffs. I think Trump was the only president that was bold enough to do what he's doing right now. He's working deals, and he's a master at working deals. And I think he's playing games with tariffs to be able to collect on revenue to cover the things that he needs to cover in our government when it comes to bills that we have to pay. But most importantly, what I think about tariffs is if we don't increase tariffs right now, where are we going to have to eventually get our tax dollars from? The American people. So this is why we're doing it.
Yeah, just get it from everyone else.
Yeah.
A lot of people are just, they make the argument, well, either way it comes from us because then we got to pay higher prices.
Of course, yeah. But at the end of the day, what are American business owners doing? They're bringing back their employees and they're bringing back their workers here. And they're building here now.
Yeah, that wasn't happening before.
Apple moved 600 pallets of iPhones overnight out of India because of tariffs.
Right.
Yeah.
Yeah, it's crazy. So with that, the tariffs are here to stay. I've seen him talk about things with, he just wants to eliminate income tax, period, for like people under 200,000. Have you heard that?
He wants to abolish income taxes for those that are making under 200K. That's a bold statement, man.
Yeah.
What he's thinking is that, if we can continue to collect money off of tariffs and continue to do it the way we're doing it, we might not be able to have taxes at all. Or better yet, I might even be able to send out dividend checks to the American people based off of how much tariff revenue we've been collecting from other countries, nations.
He's going to bring back
Stimmy checks to the American people, or dividend checks based off of the amount of tariff money he's been collecting. Very bold statement.
Like, I just wonder, like, how much of this ends up happening, because that's like literally never been done with getting rid of tax. Well, actually it is. It's like if you're in poverty, you don't pay tax. If you're making under, what is it? What's the threshold? Like 25,000 or something? Like
30,750 if you're making under that married filing joint, or 15,750 if you're single, 30,500 if you're married filing joint. You don't have to file a tax return or pay taxes.
Yeah.
Yeah.
He's basically going to be like, yo, if you make up to 200 grand, that's you.
That's incredible. I don't know if that's 90. Land.
What is that? That's got to be 80% of America.
Pretty much, I would say. Yeah. Most people fall underneath 200K without a doubt.
That'd be crazy.
That's essentially saying there's no taxes.
Yeah.
Except if
only the rich people would pay.
Except if you're high net worth individual.
I mean, at that point, it's like, that would be crazy. Do you think it'll happen?
No, I don't. I think Trump swings for the stars and lands on, the clouds. And I think he did that with some of the things that we saw with the big, beautiful bill, right? He wanted to completely abolish the IRS, no taxes on tips, no taxes on overtime pay. And where did we land? We land with being able to deduct up to $25,000 on tips and $12,500 on overtime pay. Yeah. So we didn't get all these things that he
price anchoring them.
And at the end of the day, you have the House and the Senate that are going to have to vote on things. So, there's only so much that he's going to be able to get approved.
He's also trying to do like a lot of crypto stuff, it seems like.
He's a big believer in crypto and Bitcoin and having a strategic reserve and acquiring more assets and signing laws to regulate crypto. He's a big believer, absolutely. And so is his children.
Yeah. What do you think he's going to do with, well, he can't technically do anything with the Fed, but he keeps just trying to get Powell fired.
I think,
like, what's his deal?
I think Powell's feeling the pressure. If anything, it sounds to me like they've already kind of found Powell's replacement, it feels like. And recently Powell came out saying that we're not going to base interest rates anymore off of inflation. We're going to base it off of unemployment rates. If that's the case, that means we're essentially saying, screw the dollar. We're giving up on it.
Yeah.
And we're just going to look at whether or not unemployment rates are where we need it to be in order to adjust interest rates. that would be insane. We'd go parabolic in the markets.
Mhm.
I'm excited to see interest rates fall. I'm
Yeah.
just excited to see what happens.
Yeah. I mean, the economy's had pretty stagnated growth it's weird, dude. I don't know if you see this, but for me anyways, so I'm just giving a subjective experience. Obviously, being in real estate, the last bunch of years in real estate have sucked. You know, transaction volumes at all-time lows. And so any real estate professional or investor will tell you it's been a rough road because we thrive off transaction volume.
Correct.
You know, it's like if there's no deals happening, realtors don't get paid, flippers can't sell properties, wholesalers have no one to sell to, lenders don't get paid. Like it's this title companies, the whole chain just breaks when there's no deal flow.
Yes.
And, you know, with rates being where they are and prices being where they are, it's kind of like frozen the market. And, you know, it's been tough for realtors, or not realtors, but just anyone in real estate. Then I look at small business owners.
Yeah.
And I know for a fact that small business owners are having a really rough time. Like, you know, if your business is doing under $1 million a year, like it's been probably pretty difficult.
Yeah.
But then I look at the stock market and I'm just like, what the heck? Like, you know, is at all-time highs. These massive companies and rich people are just getting richer and richer than ever. It seems like it's easier than ever for them.
Yeah.
It's like this weird thing.
Yeah. I think what it is that inflation has crept up so much that people aren't acknowledging that the cost of living is having an impact on them, even though they're making a little bit more money. Like $1 million 3 or 4 years ago meant multiple vacations a year and time to yourself. Now, $1 million is like $200,000. You barely have comfort. You barely have the ability to take your eyes off of your business for that long before you're going to be in a panic state.
Yeah.
And I think it's because everything's gotten more expensive. Hiring people has gotten more expensive. Ads have gotten more expensive. Rent, mortgage payments have gotten more expensive. Groceries have gotten more expensive. And people aren't talking about it as much anymore, but they're feeling it. And they've just been holding on and waiting for something. And maybe what they're waiting for is maybe that relief that could come with the interest rates dropping.
Yeah. And that's kind of where I'm at. It's like, it's just this weird thing where it's like, I think 80% of people are probably been struggling the last couple of years. And, you know, you got 20% who are just like doing better than ever. And it's weird to see, even at a high level, like when I talk to people on the podcast and, you know, anecdotally for myself, like the last couple of years have been a struggle, and being heavily into the real estate industry plays a major role in that.
Yeah.
But you're like, okay, well, I did not think interest rates would impact me that much.
Yeah.
Because I like to believe that as an entrepreneur, I'm in control of my destiny.
Without a doubt.
But then like you realize you also are a product of your environment too.
100%, man. Interest rates impact everybody. For me, it's impacting my business because a lot of my clients have to invest in real estate to offset their tax bill. And why would you want to jump into real estate right now if your interest rate's going to be 7.5%, 8%, right? When you knew you could have got it for 4 or 3% 3-4 years ago. So it makes it very hard for people to just say, yeah, I want to do it. But at the same time, what other options do they really have? And so people have kind of just been holding on with the hopes that they'll be able to refi.
Mm-hmm.
And I think they will. I think they will be able to refi soon.
Yeah.
Yeah.
Yeah. And I mean, prices are still at all-time highs. So like,
just where it's at right now.
Yeah. Because then, you know, we want more deal flow, but if rates drop, that's historically caused prices to go up eventually. So it's like, then prices just keep rising.
Exactly. Maybe you just priced yourself out of being able to acquire something because you waited. So no such thing as timing the market. If you have the means to get in and operate with a plan.
Yeah.
Most people don't operate with a plan.
Yeah. No, that makes sense. So, I mean, obviously you guys work with a lot of wealthy people. You guys are giving tax strategy to them, which means they're making money.
Mm-hmm.
Because I always tell this to people all the time. Like when I see people who aren't making a lot of money worried about their tax bill, I'm like, bro, you've got it backwards, man.
Yeah.
Don't worry about a future bill that's not here. Like you've just never had a tax problem.
Yeah.
You know, I'm like, it just doesn't make sense. But for those people who obviously do have tax problems, and so they're coming to you and everything else, what are some of the traits you've seen with your most successful clients? Like, why are they so wealthy?
They move quickly. They don't really second guess too much. When they have found somebody that they trust, They give ultimate trust to that person and let that person become the guide. Most of my most successful clients like allow for me to drive the ship when it comes to their tax strategy and their tax plan. Those that are trying to become wealthy or trying to get into that upper class, they're questioning everything. You'll give them the tax plan and they'll take 2 months to think through whether or not they want to do the strategy, or they'll get a second opinion or go do research on top of the research you already did for them.
Yeah.
Wealthy people move quickly. Carlton, it makes sense. It checks out. I trust you. Let's do it. And that's one of the biggest traits is they just don't have so much indecision. Another thing about them too is they were just willing to take risks, right? I think it's safe to say you want to take calculated risks, and not talking about risks with your taxes, but I noticed that they'll go and take investment risks, right? They'll go put money into a deal that may or may not pan out. They'll be okay with losing money and moving on and learning from it very quickly.
Yeah.
And they just don't dawn on things. Like if they lose money, they don't sit there and dawn on it. Oh my gosh, I lost $50,000, I lost $100,000 in this deal. Oh, I can never do another deal again. Oh, I got to be careful. I got to be careful. I got to be careful. No, they just jump to the next deal. Learned from that one, got it. This one taught me this, moving to the next one.
Yeah, I've seen that a lot, actually. People who invest in something that doesn't pan out, it's like they dwell on it for years.
Yes. And Ryan, my most wealthiest clients have multiple entities. They're not operating out of just one corporation. They're not even operating out of just one LLC or two LLCs. They have multiple LLCs, multiple assets, all flowing up to some type of parent company, typically in like a Wyoming or a Delaware. They have separated businesses based off of what their businesses are doing. Sometimes they'll have a management company that manages over their operational entities, that just gets paid to manage over their operational entities with its own set of employees, its own set of books. It's a lot of that I see at that higher level.
Yeah. Well, I like what you said of like, to even make money, you need to take risk and also be decisive.
Without a doubt.
And I totally agree. Like the people I've interviewed, just from my own experience, it's like, dude, when I have an idea, I think about it, I'm like, okay, it all makes sense. Let's roll.
Execute.
Let's do it. Like, and one thing I do think about more is the risk, because before it would have been like, I didn't think about that. I'm like, this is a good idea. Yeah. Boom, let's go. And now I'm like, okay, so what's the downside? What if it doesn't work out? What could happen? And then, you look at it, and honestly, most things don't have a ton of downside. Like the downside that people fear is just so small compared to like, or maybe like there's downside, but the probability is so small that that's going to happen.
Yeah.
And it's like, dude, if it happens, it happens. But like, you play percentages.
Yeah, without a doubt. You made a big pivot, right? When you went to the community model. I think it was like a year and a half ago.
Yeah.
What was that like? Because you had like your offers and the way you structured everything, and then you went straight, everything.
Continuity.
Yeah, everything to continuity.
Yeah, I mean.
I was like, whoa. What's going on?
Well, dude, I'm not afraid to like switch at a dime the moment I don't believe that this is viable anymore. Yeah. Like, I think a lot of people will hold on to the past and be like, oh, well, dude, this is how we used to do things. And like, it's going to come back. I'm like, nah, dude, it ain't coming back. This is like what it is now.
Yeah.
Yeah, I mean, like for Wealthy Investor on the real estate education side, I just made the decision last year in 2024. I go, you know what? Real estate market's tough. People don't have a lot of money. People are kind of fed up with just high ticket things, 10Ks, 25Ks, and whatever. I'm just going to go straight monthly and see how it goes. And so I started at cheap monthlies. Then I started expanding it and saying, okay, for $1,000 a month, you could get coaching, leads, softwares, everything all included for $1,000 a month. And then I said, okay, you want more leads, you want more service, it's $2,500 a month. And so that's exactly what we did. And I mean, from basically having no recurring revenue, by the time I figured it out, we went from like 0 to over $700K a month in recurring revenue in like 9 months.
Wow.
And, but I had to stop doing something that had made tens of millions at that point. And it's like, it's a risk.
You have what I call radical acceptance syndrome, where you can radically accept something quickly and be willing to pivot fast. And this is why you've been successful, Ryan. When you went to that continuity offer, everyone in the industry was like, what the hell is he doing? I know it because people called me. They're like, you saw Ryan just like posted that he's selling this stuff for like $97 now. I'm like, bro, watch that man cook. and then 9 months later, you're like, yeah, here's my numbers now. By the way, I'm doing a coaching, a live training where I'll teach you how I did everything.
Yeah.
And now you see all these other people hopping on that webinar, learning from you, because guess what? They don't have reoccurring revenue inside of their business.
No.
And I had to solve some of these exact same things myself too, brother, because I used to just sell tax planning and expect you to come back and want a tax plan at that exact same fee, and that you were going to have the exact same problems in the following year, versus, establishing the continuity from the onset. We're going to be your tax planners every single year. We're just going to charge an upfront fee on the front end, and then we're going to go to a monthly fee right after we finish the tax plan.
Yep.
Changed everything with our business, and we incorporated that August of last year, and it's done really well for us.
Yeah. And I think that that's the future. And, when you get an upfront fee like that, and then the retention subscription is so much less, it's like, well, I'm already so into this, and it's cost nothing to continue.
Exactly.
That's actually how I'm structuring the Golf Mastermind. So back to making decisions. Literally, I made the decision a month ago. So I was sitting in the office in July.
Yeah.
And I was like, what could I do with the current team that I wouldn't have to require or hire anyone else that has massive opportunity? That was kind of the framework I was thinking. I was like, what could I currently do where I don't have to hire all this extra staff? We already have the tools and resources to do it, but it's an opportunity just there.
Mm-hmm.
And I started just going through all the different things I'd done over the years. And golf was one of the things. I had just gotten back from playing Paynes Valley. I took 10 people. We made $100,000. Everyone had an awesome experience. Everyone was like, dude, when's the next one? How do we do this? And so I was thinking about that. And I was like, man, and I've been doing golf with me stuff for years, right?
Absolutely.
So it's not that I don't know that there's demand. I've made hundreds and hundreds of thousands just playing golf.
Yeah.
And I was like, man, I can't go on a trip every week, so how do you do this, right?
Or can you?
Or can I, right? And I thought about the model a lot, and I just started spitballing with the team and everything else. And I was like, I know exactly what I'm going to do. I'm going to start a Golf Mastermind. They're like, what is that? I'm like, dude, it's never been done before, but I'm going to do it. I'm going to take 7, 8, 9-figure business guys who love golf, and I'm going to go on epic trips with them. And I'm like, who says no to that? If you love golf, why would you not want to go on epic trips with other golfers, right?
Without a doubt.
And other guys, who are active operators. Because my problem is at the country club, most people aren't active operators. They're all old retired guys who've already made it.
Yeah, so.
But I want to golf with guys like you.
Yeah.
Who are actively doing it, who also love golf and building a business. And we could talk about continuity offers and all these things, right?
Right.
And I was like, okay, so how would I do it? Because you can't get everyone together. Everyone's busy doing different things. And I go, I'm actually going to flip the mastermind model. No one's ever done masterminds this way either. I go, instead of a mastermind being 30, 50K. I mean, dude, you just told me you joined Tony's.
Yeah.
Can you say how much Tony's is?
Yeah, bro, that's multiple 6 figures.
It's a lot, right?
Yeah.
Join Tony Robbins' mastermind.
Yeah.
Okay, so that's the normal model.
Yeah.
And if you don't show up to the event, you're SOL, dude. You just missed the event. You still owe the money.
Yeah, you do.
I don't like that. So I'm like, you know what? I'm gonna treat it like Costco. I'm gonna just charge an annual fee to be in the mastermind, and then you just pay per event that you go to. And that way, if you don't go on any events, it's not like you paid all this money and you're screwed and you're unhappy. You're like, oh, well, dude, I just paid my annual fee and this is great. My annual fee is not a ton.
Yes.
And I get to choose whatever events I want to go on with people. And then even if I don't go on an event, I'll still be able to meet Carlton online and be on trainings. And, I can go look up, oh, I'm in Southern California. Who else is here? Oh, Carlton's here.
Yeah.
All right, tight. I'm going to go golf with Carlton. Even if I never go on an event, I'll still connect.
Yes.
And I'm like, why does no one do things like this? And
this is genius.
The idea just kept flowing and flowing. I'm like, this is the better way to do a mastermind. So then anyways, it also started because I had to do it this way. Because, if I'm going to go book a golf trip, it's not like I can go book 200 spots.
No, you can't. And no one will be able to play with you.
Yeah.
You start off at different times. You can only play 4 people at a time.
Exactly. So it was out of necessity. I'm like, okay, maybe we could fit 30 people on a trip, right? And, if you're at a course that has lots of courses and stuff, right? And so that's exactly what I did. And, it's like, all right, cool. It's first come, first serve. And as we add more members, I'll just add more trips. And so it's like now maybe in the future, we're not there yet. Next year, we'll probably do at least like 6 to 8 events. But maybe we have so many members that there's a trip every week.
Wow.
And then it's like, all right, well, you're like, oh, well, I got a variety of trips now. All right, cool. We're going to Pebble. Like, I can go on that one. I'll do that one. And then I'll do that one. And I'll do that one. And to me, it's like options and flexibility matters more. And then make the trip so like cheap and exclusive that you run it like Costco. You make money on annual fees.
Yes.
And then you make the trips just so freaking good. You're just like, bro, this is awesome.
I love that idea.
So that's the model.
Yeah. And then you can make it intimate still too, because they're happening so frequently that it's not going to be 180 people.
Exactly. Because you have volume.
Yeah. It'd be like 25 to 40 people at each one. It'd be perfect. I like that idea.
So that's what we're doing. And dude, I mean, what's today? Today's it's almost the end of August. So we're about to finish the launch. I launched it on August 1st.
When did you come up with the idea? Where did the creativity come from? Were you like sitting in the sauna? Like, were you like reading a book? Like, when did you come up with the idea?
I came up with the idea here at the office, and actually I got to give credit to my wife. So the problem I was solving for was, how do I meet higher end people? And then how do I not have to hire more people and like, go do this whole thing?
Yeah.
And you actually referred to the masterclass where I taught people how I did it. That was actually first thing I was thinking. I was like, you know what? I'm going to just do this masterclass that's going to be super high level, teaching them how I build all this recurring revenue and everything else. And I'll let people book a call with me, and that'll maybe get me one-on-one clients and high level people.
Yeah.
It flopped. I did it. People book calls. It was great. And then I realized that I'm like, bro, I am not going to sit on these calls for like 4 hours a day.
No.
Like, this is brutal. I'm like, so scrap that idea.
Yeah.
Then I went back to the drawing board and I told my wife, and I go, yeah, that idea didn't work. She goes, I hate to say it, but you should probably like do the golf thing. And because she's like saying that because she knows I'll have to like
merge your time.
Yeah, like go on trips and stuff. And I'm like, don't make me go on golf trips,
Pulling my leg.
Yeah. But she's like, no, but like you've been doing it for years and you've met your highest quality people on the course. And I was like, yeah.
Facts.
How do I do it more?
Yeah. And you post content about it pretty regularly, bro.
Yeah, I love it.
Yeah. And you're good at golf.
So, dude, if I have a excuse to get better and go like, bro, but yeah, it's been a massive success. I mean, it's done a lot already. I mean, I've now made 7 figures from golf.
Bro, you made me a 6-figure golfer. I took the golf with Ryan idea and started the golf with Carlton idea. I added it to my website and took photos with some of my clients out on the golf course, and then pretty much created a whole landing page saying that if you come and golf with me, we'll talk about entity structuring, income shifting strategies, real estate strategies, and other advanced ways to offset your tax bill. Within the first year of me running the golf with Carlton, I made 6 figures. I'd only been golfing for 6 months.
Not even that good.
And I'm a 6-figure golfer, so I might have made more money than some people.
Oh, dude, pros. I mean, I was a pro baseball player. I never made 6 figures as a pro baseball player for 8 years.
Incredible.
8 years of income in pro baseball.
Yeah.
I did not cross 6 figures total. Because I made literally like $6,000 a year. So I mean, 6,000 times 8, that's 48,000.
Yeah.
My signing bonus was $20K. So I made $68,000 playing baseball for 8 years.
It's terrible.
And then I had golfed a couple times and I surpassed it. It's crazy.
Yeah.
So yeah, you've absolutely made more than pro golfers, because pro golf is the same. Actually, pro golf is worse because no one pays you. You actually pay to enter tournaments.
That's right. Yeah, you're 1099. That's correct.
It's great. Like you pay all your bags, all your airfare, everything. You pay entry fees into tournaments. There is no pay in golf.
Yeah.
The only time you get paid is if you win a tournament or you have sponsors.
This is why golfers should be doing tax planning. They're literally coming out of pocket for everything.
Everything.
Yeah, they need tax strategists.
Yeah. Unless you're in Live.
Live gets covered.
They get paid, dude.
Who's funding Live, bro?
The Saudis.
Yeah. That makes sense.
That makes sense.
Yeah. They got endless amounts of money.
Bro, if Liv wants to pay me, I'm in. I can be bought.
Let's set up an entrepreneurship channel for Liv.
Yeah. Oh, speaking of that, for anyone listening to this, we're going to go play on my new golf channel. So I'm going to link to it down below. It's called M19 Golf with Ryan Pineda.
How did you come up with the name M19?
So M19 stands for Mastermind 19.
Okay.
And so 19 represents the 19th hole.
Oh, I love that.
Because that's where, you know, all the deals happen on the 19th hole right after the round.
Yeah, I like it.
So
Classy.
that's how we do it.
Okay. I already got the logo, hat.
Oh, bro, we're going hard. I have so many things in the works. Like you know what's crazy too? I've had so many people reach out, like companies, apparel, like all this stuff trying to partner.
Yeah.
I'm like, dude, this company's been around for like 4 weeks. It's crazy.
Listen, we want to do a deal. We love what M19's doing,
Yeah,
what it stands for.
I'm like, dude, we haven't like literally done anything yet.
It's just me right now. We don't have the team yet. Well, thank you.
Yeah, I appreciate the offer.
Yeah.
It's great. But it is crazy the amount of people reaching out. Like
Yeah.
my goal of getting high level people,
Yeah.
there was no better path.
This is good. And this will be great for you because you'll be able to do something that you're passionate about. Connecting with like-minded people, learning from like-minded people, and playing golf.
Oh, bro, dude, if I never have to do a real estate deal again and I just get to play golf, I'm okay with that.
I'm okay with that too. Set it up for me as well, man. I'm going to have to do a golf mastermind with Carlton.
Yeah.
I like that.
So, I mean, as to get back on to, you know, everyone else and what they got going on in their business, is there anything else happening in the tax world that people need to know about?
You know, I had a lot of clients start investing money into movie films lately.
Whoa.
Yeah.
Tell me about that.
Yeah, this is something we probably haven't talked about on here. It's underneath IRC 181. IRS allows for you to deduct the investment in the production of a qualified movie film that's being produced here in the United States. Normally, these movies are being produced in like random distressed areas. So there's tax benefits to, you know, being a movie producer. But what movie producers do is they'll sell or finance the production to investors. So investors are taking on recourse debt and they're able to write off recourse debt as a part of their total investment. So some clients are putting in like $100,000 into a movie film, taking ownership of $400,000 worth of movie production. And that means that they get to deduct all of that on their tax returns as a tax write-off.
They get to deduct $400,000?
Yes. Like,
repeat how that works.
Yeah. So it's you investing money into the production of a movie film. But the producer is the one that is seller financing the production cost or the production back to you, the investor. So if I invest money into the movie, I'm taking on $3 of recourse debt for every $1 I invest into the movie film.
I am now liable for that debt. Is that what
You
happens
are,
as the investor?
But you're a true investor of the movie film. So the movie film...
And I also get the upside.
You do. You get the upside. So the movie film will pay you. So the movie film pays to cover the recourse debt, and any excess will then pay you out cash flow.
Okay, because I had a guy pitch me on a Christian film. He was like, yeah, you know, we're doing this film. It's, I forgot what the budget was, but, you know, we were raising X, and, like, we're getting crazy tax write-offs for people who invest in the film. And I didn't, like really push to it because I'm like, I don't understand it. But
yeah, it's an active investment. So you have to watch 100 hours of movie films before you...
I've watched that.
Yeah, before making your decision. But that's essentially how you get material participation. Kind of like with the short-term rental strategy.
You have to literally watch Netflix and you're now an active movie pro.
Yes. Yes.
So I'll be a golf pro and a movie pro.
You could do both.
Okay.
And have this on your tax returns as a tax write-off.
And a real estate pro.
Yeah.
Okay.
So I parked about $500,000 into movie films last year and got about a $2 million deduction.
No way.
I'm not kidding.
Okay, so what happens once the film does whatever it does?
The movies are already out. I watched, one of them was a Sylvester Stallone movie.
Really?
The other one was a Jackie Chan movie where he...
What was it called?
Wish Dragon 2. And the other one was called Alorum. So Alorum, which is out on Amazon Prime right now, which you guys can watch that movie. And Wish Dragon 2, which is a Jackie Chan movie. Both of those movies we had access to invest in. We have a Mark Wahlberg movie, Flight Risk, that our investors are able to invest into. Have you heard of the movie Flight Risk?
No.
Okay, so that's a Mark Wahlberg movie coming out. And we have a bunch of other movies.
I need to get Mark Wahlberg on the Golf Channel, by the way.
You absolutely should.
Yeah.
But yeah, so I got the deduction. I got the K-1. It got filed inside of my tax returns. And now the recourse debt has to get paid back. So the money that's coming back out of the movie is going towards paying the recourse debt. I report the earned income on my tax returns and will pay taxes on any income I receive.
So let me just be clear, though. Okay, so obviously you're investing, so you're trying to make a return, not just get a write-off.
Correct.
So it's similar to rentals. From that standpoint, okay, you start, they first pay off the debt.
Yeah.
Do you have to recapture? How does that work?
You pay income taxes on the recapture of the income that you're receiving, yes. So it's a tax deferral strategy. I'm saving $2 million now, and as the money starts coming back to me, I'm claiming that as income on my tax returns.
No, but like, let's just say, okay, because you invested 100, let's just say, and you finally get 100 back.
Yes.
How does it happen tax-wise at that point?
It's coming back as ordinary income.
The 100K.
Yes, even my investment is coming back as ordinary income.
So you get your 100K back, and you pay tax on 100K.
Yes.
And but then you would have got a 400K write-off before.
Yes. Kind of like when you...
But is it like depreciation where you recapture or no?
It is like depreciation where you recapture.
So is it really like 400K back?
$400,000 that I'm going to be receiving, not just $100,000.
Because you recaptured that.
Because I took a loan in order to take the ownership of $400,000 worth of value in the movie film. That's correct.
Got it. Okay, so it's very similar to, can you 1031 it or anything?
No, you can't. You cannot 1031, but you can keep investing into more movie films. So it's kind of like kicking the
You get your 100K back, you throw it in. It's literally the same as rentals.
It made sense to me, and that's why I did it. And I look at it like buying a vehicle, right? So when you buy a vehicle...
Yeah, you got to recapture at some point.
Yeah, exactly. You're putting a down payment down, but why does the government let you write off the debt from you taking on a loan from the bank when you go buy a Tesla that weighs 6,000 pounds? It's the same thing. You're writing off the debt plus your down payment. But if you were to go sell it, you're going to have to recapture the whole thing, the debt plus the down payment.
How long does it usually take to recapture?
The movies typically... You're going to recapture 100% of your investment within 3 years.
3 years, got it. And then like, what's the actual expected return on your 100K?
You're looking at about 10 to 15% returns over time. Sometimes more, depending on if it's a really good movie. And also they have performance, so you can kind of see how the movies are going to perform, whether or not they've been sold to other countries like China, whoever. Sometimes if you have good actors in the movies, they already know that they're going to do.
It's going to be legit.
Yeah, they're going to be legit.
I've been seeing that a lot though with like all the superhero movies, them saying like they're all like not breaking even.
They're all like doing these random remakes and getting them out so quickly. And then next thing you know, it's like they're in the movie theaters and then they're immediately on Amazon Prime.
Yeah,
you
like,
know
how
what
do
I'm
you
saying?
make money?
How do you make money? Like, aren't you supposed to keep them in the movie theaters as long as possible before you release it? I know they did that with F1, and I know that movie knocked it out the park. Like, that was a really good movie, but they kept that movie in movie theaters. Same with Mission Impossible for like a longer period of time before they pushed them over to like Amazon Prime or Netflix.
Right.
Yeah.
Okay, so you're doing movies. Dude, somebody pitched me on this idea of trust and nonprofits and all this stuff, and basically having everything you own flow into a nonprofit and, you know, all this stuff. What do you think about all that?
Yeah. I'm not a big fan of it. Anytime you have somebody telling you that you should have multiple trust structures to avoid taxes, is probably trying to abuse the tax code in order to eliminate taxes, because trust structures weren't really set up in that capacity. That being said, can you get things out of your estate to mitigate estate taxes? Absolutely, you can. But the whole idea that you're talking about is breaking down a business to where it's owned by a business complex trust, and then having the business complex trust donate the leftover assets to a family trust, and then the family trust makes a donation over to a private family foundation, and then you take a investment loan to an investment LLC, or you loan money all the way back up to the parent entity in order to have liquidity. That whole structure that was shared with me by an attorney, one, was told to me that it costs around $150,000, $200,000 to set up, about $20,000 to maintain yearly, and that it's very, very, very easy for someone to abuse it when they don't know exactly how to flow money or expenses across. So it requires ongoing maintenance. I don't think it's worth setting up, nor do I think that in order to get the desired outcome that you're looking for, which is asset protection and mitigation of taxes, that you have to set up all these trust structures in order to do so.
Right.
Yeah.
Yeah. I took their thing and put it in chat, and I was like, chat, tell me like where the flaws are. It's crazy how like good chat is, but it's like, yeah, this is like the sovereign citizen argument. I'm like, I'd never even heard of that before. It's like basically like there are people who believe that you don't have to opt in to pay taxes. Like it's an opt-in. It's a voluntary act. And I guess there are things saying it is. And I was like, wonder how all that works.
Mm-hmm. There's like a whole community of people that are just like, do these things, write this letter to the government, and you're not going to pay taxes anymore. And I'm like, okay.
It like the arguments make sense like I'm reading them and I'm like, okay, it makes sense. It makes sense. And I'm like, I don't really want to go to jail.
Yeah, that's how I'm feeling. Like they're like talking about your social security is not really attached to you.
Yeah.
I'm like, okay, let me not go to jail. That's that. I'm black and white type of guy. Like tax code's pretty black and white for me.
Yeah.
Yeah.
And there's lots of ways to like legally, I don't want to say avoid, but just like eliminate your taxes.
Without a
Like we're
doubt.
talking about them right now.
Yeah.
Go buy movies.
I think if you're going to do that much level of research, why don't you just research some tax strategies that you can set up? It's far easier to go down this route versus trying to tell the government you're not going to pay taxes ever again.
Yeah. What do you think about with AI and everything, right? I mean, we were talking about it before, and you were saying one of the big things that you were hearing at one of your masterminds was you're like, yo, AI, AI. And one thing that I've said and others have said is like, man, accountants, bookkeepers, everything's gonna have a tough time with AI just kind of like telling people what to do very easily. Like, you can just chat anyone's advice these days.
Yeah, I think with AI, it's definitely coming for the tax and accounting industry, but not coming to replace CPAs or replace enrolled agents, but it'll be those enrolled agents and those CPAs that are able to adopt AI as a way for them to help complete work and validate work that will be at the cutting edge of the tax and accounting industry. The ways in which we're using AI right now is in communication, assisting us in how we communicate with clients because we have a knowledge base. But I also believe that the way in which AI is going to be able to help accounting firms grow is on the agentic side. How can AI do some of those smaller tasks for you, knowing that it's still going to require a human with experience in order to customize someone's experience on the tax return or building a tax plan? I don't think AI is ever going to be able to replace tax strategist, because when it comes to the AI being able to sign off on a tax return or represent you in front of the IRS, it will never be able to do that. It will never be able to have the experience of sitting in IRS, courtrooms or dealing with IRS audits. And so it won't ever be able to give you that context that you're fully needing based off of your situation.
So that being said, how do you guys see yourselves implementing it to help your clients?
Yeah, we are focusing on using agentic AI to be able to help us set up LLCs and to set up flowcharts. Why should a tax professional have to sit behind a computer going to the same websites to input the same information if it's all the same process? If you have the same process on how an LLC gets set up, you can train an AI to be able to do the exact same process and go apply for an EIN number and go apply on the Secretary of State's website for an LLC. Same thing with creating flowcharts, right? If I know that there's 6 LLCs that need to flow up to one parent company, and this is going to be repeated for any type of real estate investor or real estate investors that have these properties, why can't agentic AI create these types of flowcharts? One of the things, too, that was really an issue, Ryan, for us is, when Donald Trump decided to implement the big, beautiful bill, everybody's tax plan we had built out for the year, we had to update. I'd already sold a lot of work, dude. I already sold 200 tax plans in, and now we had to go back and redo 200 tax plans. Yeah. What if I could just tell AI, hey, AI, can you go update these tax plans to reflect 100% bonus depreciation applicable to every single state and go update every tax plan?
That would have saved you a lot of time.
That would have saved my tax pros hours, hundreds of hours of time.
Yeah.
So yeah, those are the things that
money and stuff too.
Saves them money because they can make decisions faster.
Yeah. Well, and I think down the road as well, it's like your guys' pricing and things change where it's like before maybe you would have had to bill them X hours to go do that amendment.
Yeah.
And now you're like, hey, we only got to bill you an hour for this now. Like it's easy.
That could have saved my clients money as well.
Yeah. Yeah, it's interesting to see what AI is going to do, especially in high skilled industries like, with lawyers and tax strategists and accountants and coders. And
yeah.
I'm just like, bro, it's coming. It ain't coming for like just normal jobs. It's coming for everything.
I think it's so funny that we were telling our kids a couple of years back. I mean, I read articles. Tell your kid to become a coder. Make sure they go to college for
coding. That's the dumbest thing you can do.
It's the silliest thing you can tell your kid to do right now.
Yeah.
Because AI will forever be able to code better than your child.
Yeah,
These chips that are coming out from NVIDIA are light years ahead of however you think your child is going to be able to code. Yeah. It's just going to do it 90
told our
times
team,
better.
It's funny. Like I've been getting pitched on all these AI calling systems and stuff.
Yeah.
Because most of my business is sales and marketing for all my companies. And, everybody's pitching us on their version of the AI. I'm like, bro, everyone has the same freaking thing built on ChatGPT.
Yeah.
And like, I actually have more data of everything. I have all the data of all the sales. I can build my own. And then Chat 5 came out and was like, yeah, like everyone's going to be able to build software easily. And I told the team, I go, guys, Sam Altman said we can build software like right now. Do it. Just tell chat to do it and see what it says.
Mm-hmm.
Within days, we had a calling system.
Wow.
And it's not like good yet.
Yeah, but it's there.
But like the code to like start a software, I'm not even calling it a company because it's internal use for now.
Yes.
But like that would have taken months or however long before with all these coders and people doing it. And I'm just like, chat, because I told them, I go, if you guys can't do it, I'll mess around with chat and just do it. Chat, make me a software based on XYZ. Chat's like, done. And it's like insane.
Yeah, give me 18 hours.
Yeah.
I love it. I love it sometimes when like chat's like, give me 12 hours. I'm going to come work on this and get back to you. Like, I've given it some big projects before.
Really?
Yeah. Like I gave it a whole book to like refine.
Really?
And yeah, I wrote a whole book and I was like getting ready to publish it. And I'm like, hold on a second. I should just ask ChatGPT to like, anything that I'm saying in here that's redundant, like remove all redundant. Any words where I'm like repeated, make it sound even sexier. And it just went through the whole book.
Yeah.
And like, yeah, it's still my voice and everything, but like, wow.
It's
refined it after like 12 hours. And like it had to understand my entire story and read everything in order to go in and insert what it needed to insert.
Like what's going to happen to ghostwriters?
They're gone.
Yeah.
What's the point of having Ghostwriter when I have Ghost ChatGPT in my pocket right now?
Write me tomorrow.
Yeah, write me a lyric right now before I go on this show. Ghostwriters are a thing in the past, if you ask me.
Yeah. Yeah, even like I was thinking even just ghostwriting for books and stuff, but like, yeah, I mean, even you think about music, like, you know, AI is going to create beats and all these things way better. Like, imagine you're a producer and you're like, yo, these are the top 100 songs of the year. Emulate, you know, the beats and get me the next viral TikTok beat.
Tell me why these beats were so viral, and then let's duplicate beats like this.
Yep.
And then give me hooks.
Yeah. It's like, boom. All right, let's go.
Yeah.
It's getting and then actually now just AI my voice singing it. All right, make the song.
Have you done any AI ads yet?
Not the ads yet.
Yeah.
Have they worked for you?
I haven't tried any. I've seen Russell did like before his challenge. He does like a little monthly challenge that he had like this like little baby AI talking head. I don't know if you've even seen like the baby versions of people.
No.
You could like turn yourself into like a cartoon baby and it could like talk.
Yeah. I
definitely want to try that one out for sure.
Oh, you know what? We actually did. I take that back. We did try anime ones.
Really? And
yeah.
As ads?
Good. Yeah.
And?
They did pretty good.
See what I'm saying?
Yeah, we're not doing them right now. Like, I mean, honestly, we could be doing them. I don't even know. But we did do anime ones.
Yeah.
So it just took me doing my ad, and then we were like, make it anime. And so it was like me as Goku, just freaking buying real estate.
A year ago, when we were talking, maybe it was a year and a half ago, you were focused on trying to like spend more money.
Yeah.
And then obviously you transitioned to continuity. So now that you transitioned, do you have to focus so much on spend anymore? Or has it been less about spend, or where are you at now?
No, actually, I'm still the same. I want to spend more.
Okay, got it.
Because now I understand all my CAC to LTV.
Yeah.
And so now it's just a game of spend.
Yeah.
Like, can I just keep getting the CAC that I need? And if so, then I'm going to be good.
What's your vision for the business?
With Wealthy Investor, I mean, the goal is to get it to, I mean, ideally, a point where I can sell it.
Yeah.
And now that it's continuity, I keep slowly removing myself more and more. And so, as that goes on, it's obviously a lot more sellable, being stickier, because now everything is included. Their leads, their software, the coaching. Like, if you stop, you don't have a CRM, you don't have coaching, you don't have leads. Like, you're just probably not going to be in business.
Yeah.
So, there's that. But the other hard part of it too is because we attract brand new people, you got to just get them over the hump. And so you're not taking an existing business and putting them on your system. You're giving somebody your system from the beginning.
Yes.
And so, you got to make sure that they give themselves enough time to succeed. Because that like most people who try a business, they're like, oh, freaking didn't work after 2 months, I'm out. And it's like, bro, you got to give this at least 6 months, at least a year.
Yes.
And so I'm now testing different things. In fact, actually this week, I tested for the first time doing a forced 6-month commitment. And I said,
Okay.
we will not work with you without a 6-month commitment.
Mhm.
And before it was always just monthly. I'm like, yo, cancel anytime. It's all good. And we got to that point just with that.
Yeah.
You want to know what's funny?
What?
I forced a 6-month commitment and then I added a 6-month guarantee and it converted better.
What was the guarantee?
If you don't close a deal after 6 months, we'll work with you for free.
That's pretty good.
Yeah.
That's pretty good.
Because
but then there's a guarantee that you actually have to show up at least. You have to do the training because I'm not just coaching you for free if you're not showing up.
Well, no. There is, but it's actually easier than that because we have their CRM. I say you have to spend 5 hours of talk time a week on the CRM.
Okay.
Because I can
see you. That's on the CRM. I can track everything.
I can track it all. So if you're not putting in the work.
Yeah. You put in 5 hours for 6 months. You can't get a deal. Like there's physically something wrong.
Well, it's not even that. Like, we're not tracking them for the first 6 months. Like, I mean, I technically could, but I'm not like saying, hey, if you didn't call during the 6 months, you're screwed. Your guarantee ends. I'm saying the moment, I don't care if you did nothing the first 6 months, we'll keep working with you starting week 1 of month 6. But from that point forward, we're tracking you. And if you miss a week.
Got it. That I understand.
Yeah.
Yeah.
Like, I'm not going to babysit.
That's betting on somebody's success, though.
Yeah, I'm not babysitting them for 6 months.
Yeah.
But at that point, the moment you activate the guarantee, all right, we're checking in on you weekly. And if you miss, I mean, it's not like you're out. You'll just keep paying.
Yeah.
But like, we're not going to work with you for free if you're not actually making calls.
Yeah.
Because we're going to still give you leads. We're still going to give you coaching and software and all this stuff, but you got to put in work now.
Yep. How many members are in the community now?
2,800.
That's impressive. What would you say the average monthly is for?
I mean, we've had the community so long, so some people are on like other things. Some people, were on 97s.
Yeah.
Some people were on all this different stuff. But like I said, I mean, our MRR right now is over 700 a month.
Yeah.
And now I think it's going to go higher with the same spend because of the 6-month commitment.
That's amazing.
Because we'll attract better people who are committed. And then also too, what I just saw happen this week too is it's forcing more 6-month pay in fulls. Because because now you're offering the ability to pay in full. Yeah, because before it was just monthly, and so there's really no incentive to prepay if you could go monthly. Why would you? Yeah, right. And so now it's like, well, if I'm committed for 6 months anyway, so now that gives the business more cash up front, and so everything about it's better.
Where do you think it needs to be in order for it to be acquired?
I mean, it could get acquired now, technically.
Right. But where would you want it to be?
My goal is next year, get it to, double what it is now. If I can double what it is now and keep removing myself and maintain margin, then it's in a good spot.
Where do you have to keep churn percentage at?
It's interesting because in this business, it's not like tax where your churn is going to be much lower. Yeah. Right? Because if by default we're getting brand new entrepreneurs in the real estate space for wholesale specifically, the churn's going to be higher. Yeah. But I think if I can get churn to like 10% a month, it's going to be pretty good.
That'd be insane. That'd be really good.
But think about this. This is like why I'm so excited about golf. What do you think the churn rate will be on M19? Like, how much do people churn out of a golf club membership?
I can't imagine very many.
Right?
Yeah.
Like, I've been a member at my club for years.
Yeah.
I mean, most people are members at their club for
Even
years.
if you don't go, it's just like, why would you cancel it type of thing?
And by default too, because we do annual only up front. There's no monthly. It's just you have to pay your annual up front. By default, your first year churn can only max be 8%. But they're going to renew. Like
the chances of you renewing is pretty high.
Very high.
Yeah.
So if like 80% renew for year 2, which I think that could even be low, now you've got basically everyone for 2 years. Now your churn's like 4%. Like, and that's just 2 years.
Yeah.
Like
your retention on that's going to be really great, really sticky.
So, for me, I kind of like, now that I've gotten in the continuity game on that model and then going this model, I'm like, okay, I understand like why certain things have super low churn.
Mhm.
You know, you're either selling to really rich people or you're selling something that's super necessary, like a CRM that cannot switch.
Yes.
Your HubSpot
Yes.
for Salesforce, or your Netflix, and you're selling something super low that is applicable to everyone. But, you know, it's kind of hard. Small business is the worst thing to sell to. I
Why?
actually learned
Why you say that?
because they always pinch pennies. So like I actually learned that from Neil Patel.
Mm.
So Neil Patel was like, take for example an ad agency. So if you're a small business ad agency, it's really hard because they're like paycheck to paycheck every month, like in a small business. Like
Yeah.
that's just how small business goes. And they can't really even afford to spend $5,000 a month, $10,000 a month on ads. Like most people are word of mouth, referral, like organic. And so
Yeah.
that's a big amount of money to spend. And so the churn rate is just high when somebody's like that.
Yeah.
And so Neil's like, and Gary Vee's the same way. He's got his own agencies. They only work with Fortune 500 companies because guess what? Those people don't churn. Like
Mhm.
they'll sign big contracts.
Yeah.
They'll spend millions or tens of millions or even hundreds of millions. And, you know, it's like if you're constantly having to get new clients over and over again because your churn is high, CAC is going to eat you alive because
Yes,
we
it
know
will.
that ad costs are just going to keep going up.
Yes.
So then it just becomes a game of you cannot, it's impossible to have low churn on the wrong client. You can't have low churn in just certain industries. It's literally impossible.
Yeah.
And so I've been thinking a lot about that of like, okay, well, you're in an industry like golf that has low churn for a reason
Yes.
because you have wealthy people, you know, like, dude, I would sell my house before I'd give up my golf club membership. I'm dead serious.
You're serious about that because you know the relationships you have.
Well, I get more fulfillment being a member and golfing at that club than I do. Like my house to me is expandable. Like
You can move and live wherever.
yeah, I'm good, but I still need somewhere to go play.
Yeah.
Like I'm cool if like, okay, you know, I hit hard times, I sell my house and I go get a cheaper house and like I'd be good. I would do that
Yeah.
before giving up my membership.
They told you can't come back. You'd be like, no, sell my house.
Yeah, get rid of the house.
I'll move out. Keep my membership.
That means you're a pretty sticky customer.
Yeah. And also is a testament to the membership that you have. Right?
Yeah.
There's things about that membership that are invaluable to you.
You ask a lot of country club members, they'll tell you the same thing. They'll be like, oh, bro, like that'll be the last thing I cut. I'll
Yeah.
cut the family vacation. I'll
Yep.
cut the like whatever.
Yeah.
But I ain't cutting that. Like
Yeah.
that's what I do every week. That's the boys. That's whatever.
That's the reset.
Yeah.
That's
and,
the reset.
Well, also too, the hard part is, and this goes back to stickiness too. A good country club has usually a high initiation fee.
Yeah.
So, you know, if you paid $50,000 or something, $100,000 for a membership, and let's just say your monthly dues are $1,000, $2,000 a month, it's like, bro, if I give this up,
Yeah.
that just goes away.
Yeah. And then coming back in, it's arguably twice as expensive.
Exactly.
Yeah.
Because then you're going to have to go join somewhere else.
And some clubs view you as like an owner of the club when you take.
Some have equity.
Yeah. Some have equity. So, and they expect you to take care of the course too while you're out there. When you're a member, like, you're expected to take care of the course.
Yeah. So a lot of things. But dude, we got to actually go out to the course. So, hey, where can people get in touch with you about doing these movie things, tax strategy, all this stuff?
Whether it's real estate, oil and gas, movie films.
I forgot you do the oil and gas stuff too.
Yeah, I like oil and gas too. They can get in touch with me through taxalchemy.com. Go to our website. You can always go to our Instagram page and click on the link in bio. But the best place is to go to taxalchemy.com, listen to our testimonials, book a call with our sales team, and allow for us to kind of talk through your situation and see if it makes sense for you to jump into tax strategy right now.
There we go. Guys, go check them out, taxalchemy.com. We will link to it down below. And go subscribe to the other channel, actually, to go watch the match that Carlton and I are going to have. I'm going to link to that down below, too. All right? We'll catch you on the next one. Peace.